what.
So when you get in the financial forest, you need someone to guide you.
You do, you certainly do.
Okay, now, why, that leads me to an obvious question. Would it be cheaper, even though you don't charge, would it be cheaper for the client to go, say, direct to the Commonwealth Bank or the ANZ? Would they do a better deal direct because the bank's got to pay you, or how does that work?
No, the banks pay, the deal is exactly the same. We get very uppity if we hear that the branch can do something that we can't do, and the banks basically keep it exactly the same. So what we do, rather than just going to the branch, we just take all the hassle out of it. There's so much involved, from taking the application to getting it approved to getting it to settle, and we handle all of that. We handle it from application through to settlement and make sure it settles, and the after-sales service is there as well. We look after the clients ongoing, as you do when you go to a doctor. You really want them to know your whole financial circumstances. I had clients the other day who said, you know more about us than our own family do about our finances, and they said, thank God if something ever happens to us, you will know and you will be able to tell the people that are there. And that is just brilliant. That is what we want. We want that relationship ongoing. And with the new legislation coming in, we've been regulated since the 1st of July, and all the lenders will be from the 1st of January. There is more duty of care to find out more about the client's short-term and long-term needs. We've really got to drill into what are they looking to do. I mean, if they're a young couple, are they looking to have a family in 3 to 5 years? We really have to now be more like a financial planner and find out everything about someone, whether they are going on a holiday, or there's just so much we need to find out now.
By law.
By law.
So really, what you're finding, the financial planning and insurance, that all starting to get overlap areas.
Yes.
Okay.
Yes.
Because the financial broker, really didn't need any qualifications.
No, we didn't. Anybody could start up, and I've been doing it for 13 years, and there's been a lot of people come and go. There's been good money in the industry, so people have been motivated by that, by the commissions that have been achieved. And now there are people leaving the industry because it's just getting tougher and tougher. The paperwork, there's so much more paperwork. It's going to take 1 to 2 hours for an interview, where we could have done it in 45 minutes before. We've got national, Mortgage Choice have given us nationally forms to fill in, extra forms, extra paperwork, and now one of the banks this week came out with their extra paperwork that we're going to
Commonwealth
need.
Bank?
ANZ. For a start.
I heard last night Commonwealth Bank from the 1st of December, which was yesterday. Yeah, is now they've on the 1st of January. Apparently, there's a federal law that comes in that about
affects
guarantees.
The banks, yes.
Just in layman's terms, explain that to me.
The new legislation just means that every loan we write has to be not unsuitable for the borrower. Not suitable, but not unsuitable. So, as long as it's suitable to meet their needs for the short term and the long term, that will be covered, but we just have to document that a lot more closely. We have to document what we discussed with them, whether it was fixed or variable, whether they wanted a 30-year term, whether they wanted interest only. So that's all been documented. The change that has happened, particularly with the Commonwealth Bank, is that they were the only bank who did a servicing guarantee. Now, what that meant was if a young couple came in and they didn't quite have enough income, we could do a loan. The parents could go guarantor for that loan. They were the only bank that were doing it, but because of the new legislation coming in, they're not doing that. The banks are still doing guarantors for security. So if the young couple don't have enough savings, their parents can put up another property as collateral, their property, preferably an investment property rather than their owner-occupied property. Parents still have to be working, they can't be on pensions, that sort of thing. So it's sort of duty of care again back to the parents, that they're not getting into something that is going to affect their financial standing. So changes have been happening like that.
So Wendy, what's happening in your industry is that the requirements have gone through the roof. The time it takes to process the file, the complexity of meeting all those targets legally have gone through the roof. The banks have halved your fees, or?
Not halved. The upfronts are pretty much the same. The trail went down about 70%, but it's coming back up to about 50% now.
So the bank's trying to get rid of you?
I don't think so at all. Definitely not.
That's the question I ask.
Definitely not. Look, the Commonwealth Bank and Cathy Cummings, I take my hat off to, are so supportive of the broker industry, along with the major banks and a lot of the smaller national. Because
they weren't keen there for a while.
National, we write loans through Homeside Lending, which is part of the National Bank. As Mortgage Choice, we've actually just launched our own loan, which is funded through Advantage, which is owned by National Bank. So They can't do without us. They honestly can't, because the expertise in the branches is not there anymore.
So they
we are
wouldn't have
the
enough.
experts.
They wouldn't have enough people on the ground to write the loans anyway.
No.
Right.
No.
Okay.
And
now,
we get that feedback all the time, that they haven't rung me back, or they'll see me next week. I mean, this, you know, my whole crux of my success is my sense of urgency. I just have this, you know, you've just got to get onto it straight away. Got to do that.
Now let's get to the practical side of financing now. So we've worked out how the industry works, we've worked out the changes coming through. Now let's talk nitty gritty, absolute property stuff. I want to buy at auction. Tell me, can you make the 30 days with your financing? How sure can they be that they'll be able to get the funding in the changing environment? Is that why the auction clearance rates have dropped, because of the funding side of it? Because they've gone from 70 or 80 to 50, or is it the market conditions? You mean you're really in the thick of this? Let's just talk about auctions and funding an auction, and talk me through that.
Well, obviously, if someone's going to an auction, it's an unconditional contract, so they have to be pre-approved, absolutely have to be pre-approved, which means we've done an application to a lender and the lender has approved it. It might be subject to valuation, it might be a 95% lend. There's a bit of a risk there if the valuation doesn't come in, but we all know these days, and I haven't had a case where it isn't, that a price achieved at an auction is the valuation, because that is the market value.
Yep.
And the auctions are, the bids are real. So there's no risk there, but definitely have to be unconditional. And the other factor with that, which we have to take into account, is that the deposit is required, and it can be up to 10%. And that can be a deposit bond if the people are buying investment property, particularly they don't have cash. And that's something that we help the clients negotiate with the agent prior to the auction. So we're helping them all the way through.
So can you make the 30-day settlement now?
Yes, we can. Yes.
Right, because my understanding was that the funding's taking so much longer. No,
that's not true.
Right.
The lenders are 2 days, 3 days. My office gets priority because we write so many loans, which is fair enough. And it's really up to the quality of the submission. I saw some people on Tuesday that were referred to me to an agent. Now they bought a property 3 weeks ago. They've been through their broker, interstate, they've been to a bank. They were told they had the 80%, they didn't have the other deposit, which meant refinancing. They came to see me because they really just weren't getting anywhere. I initially did a credit check on them, because if they'd done applications elsewhere, that can affect your credit rating.
Yep.
There were no applications had been done at all. So all these other brokers or whoever, bank, were telling them what they had done and it was okay. It wasn't okay. So now I think I can do that deal, and it's great for me that they haven't had other applications in the system, because it does affect your credit rating.
So if you shop around and go to a different bank and there and here and there, you need to manage your own brand, your own personal brand?
You do.
So explain that, because people wouldn't necessarily know that.
If you apply more than, say, 2 or 3 times, if everything's okay, it should be okay to get a loan if every lender approved that loan. But the banks start thinking, well, why didn't you come to me first? Why have you gone elsewhere? The credit check doesn't show whether it's been approved or declined. So a lot of the banks now are credit scoring. We have applications we send in and they say fails credit score. And we say, why? Oh, we can't tell you, because it's a invisible thing that's behind the application, made up of probably 50 different questions, like how long have you lived in your house, how long have you been in your job, all those sort of things, whether you're single or married, or how many credit cards you've got, or how many savings accounts have you got, all add up to make a credit score for people. Some banks aren't credit scoring, so if we knew someone had applied a few times, we might then go to the lender that doesn't credit score and be able to get that loan easily. Again, this is why a really good broker is very, very critical these days.
Yeah.